Welcome to Talk Tickers. You're here for the shortcut, the real story behind crucial earnings calls.
And today we're diving into SAP's first quarter for 2025.
Yeah, quite a start to their year, seems like. They really hit the ground running despite, the wider economic stuff going on.
Definitely. Strong growth, especially in cloud, and a big jump in profit.
Okay, so let's hit the highlights first. What are the key numbers we need to know?
All right, so the big one is the current cloud backlog. That's ballooned by 29%, hitting 18.2 billion. Huge number.
Wow, 29%. That signals quite a bit of future business locked in.
Exactly. And quarterly cloud revenue itself, almost 5 billion. That's up 26%.
Okay, and more of their revenue is predictable now, right?
Yeah, a really high percentage. 86% now falls into that more predictable category.
And profits, you mentioned to jump there.
A substantial one, operating profit, was up 58%. And importantly for the cloud story, the cloud gross margin improved too, up 2.6 points to 75%.
75%, that's pretty healthy. What about total revenue?
That grew too, 11% to 9 billion overall.
So solid growth across the board. But they kept the 2025 outlook the same.
They did, yeah. For now, no changes. They did flag, potential risks, trade disputes, currency conversion rates, that sort of thing.
Right, the usual macro uncertainties.
But their forecast basically assumes conversion rates stay, consistent with how they've been.
Okay. Let's dig into that cloud backlog growth then. 29%. What's really driving that beyond just, signing deals?
Well, it's definitely about securing those future revenues, like you said, but it also shows, I think, real customer confidence. Businesses are making multi-year bets on SAP's cloud platform.
Right. It's not just a short-term thing.
Not at all. And it seems the cloud ERP suite is still the powerhouse.
Yeah, I saw that. 33% growth in Q1. That's strong.
Very strong. And it makes up, 85% of their total cloud revenue now? So it's absolutely core to their strategy. Customers are moving those critical systems.
Makes sense. And there's something about Q4 bookings affecting Q1 revenue.
Yeah, little nuance there. Some bookings made late last year only got provision basically switched on for the customer in Q1 this year.
Ah, okay. So that might mean Q1 revenue was slightly held back, but maybe Q2 gets a bit of a lift from that.
That's the thinking, yeah. Could see a little bump next quarter.
Interesting. They did mention, though, a bit of softness in transactional cloud revenues, attributed it to the macro climate.
Right. Those usage-based revenues, they tend to react quicker to economic jitters. Businesses might pull back on that kind of spending first.
But the strong backlog suggests the core commitment is still there.
I think so. The long-term strategic stuff, like moving ERP to the cloud, seems unaffected. It's more the perhaps discretionary usage-based stuff feeling the pinch.
Okay, let's pivot to profit then. That 58% operating profit increase, that really stands out. What's behind such a big number?
Well, a fair chunk of it is actually down to lower restructuring costs compared to last year. Remember that big transformation program they had in 2024?
Right. That's mostly done now.
Seems like it. But it wasn't just that. Both their official IFRS profit and the non-IFRS figure, the one that kind of smooths out those one-off costs, showed growth.
So real operational improvements too, not just accounting changes.
Exactly. They're genuinely getting more efficient from that transformation work.
And that feeds into the cloud gross margin improvement too, I guess, getting up to 75%.
It does. They said it was broad-based, better gross profit, yes, but also keeping a tighter rein on cost selling, R&B, admin expenses.
Yeah.
All those ratios looked better.
So just running the cloud business more efficiently overall.
Pretty much. And they even mentioned using their own AI tools internally.
Yeah, Joule for consultants.
Yeah.
And tools for developers.
Right. Trying to boost productivity.
Yeah.
It's that idea of decoupling top-line growth from costs. Grow revenue faster than your expenses.
Smart move. Use your own tech to make yourself leaner.
Makes sense. And they're also standardizing cloud contracts, automating things to get customers onboarded faster. Another efficiency play.
Sounds like a focus on execution. They also seem to be landing some big fish, customer-wise, especially automotive. Volkswagen, Hyundai, Kia.
Yeah, that's significant. The auto industry is going through, frankly, chaos. EVs, new business models, cost pressures, sustainability, supply chains. It's intense.
So these companies are turning to SAP to help navigate all that.
Seems that way. It suggests SAP is seen as a critical partner for that kind of major transformation. They also mention Mazda, Vasto. Quite a list.
And beyond auto, any other interesting...
Well, yeah, a whole range. UK Power Networks, Tyson Foods, Science Co., Japan Railway Wise, Gymshark.
Gymshark. Interesting.
Yeah, and Straw VFS using Grow with SAP, also Con Group, Booking, Axo Services, quite diverse.
And that Grow with SAP offering for the mid-market seems to be working. 2/3 new customers.
That's a great sign for them. It shows they're not just relying on the huge enterprises, they're successfully pushing into that mid-market segment, bringing in totally new logos.
Okay, let's talk about this new thing, the Business Data Cloud. What exactly is it?
Right. So think of it as a central hub for data. SAP data, non-SAP data, structured stuff like spreadsheets, unstructured stuff like documents or emails, all brought together.
Kind of a single source of truth.
That's the goal, and they're putting a strong semantic layer on top, basically making sure all the data means the same thing, giving it context.
Okay, and they partnered with Databricks.
Yeah, a big name in data analytics. The idea is to make this business data cloud a really powerful platform for insights. And the pipeline seems to be building fast. They mentioned 20 deals closed in Q1 already.
20 deals already for something just launched.
Seems like it. Companies like Con Group, William Back suggest there's immediate interest.
And how does this tie into their AI strategy?
It's fundamental, really. Good AI needs good data, clean, consistent, harmonized data. This business data cloud is meant to be that foundation.
So it fuels the business AI and makes the whole SAP suite smarter.
Precisely. It's a key pillar for building those end-to-end AI agents they talk about. They also mention tweaking their RISE, offering enhanced packages, more flexibility between private and public cloud, making the cloud transition smoother.
Okay, let's look ahead then. Guidance for 2025 is unchanged, but they mentioned those macro risks, especially trade disputes affecting currency rates.
Right. It's a nod to the uncertainty out there. They're confident in their own execution, but they can't control, global trade flows or exchange rates.
So they're basically saying our plan is solid, assuming the world doesn't get too crazy.
Pretty much. Their current outlook assumes conversion rates stay stable, but they emphasize being disciplined, managing costs, protecting profits, and cash flow, whatever happens. Prudent.
Speaking of cash flow, those numbers look good. Operating cash flow up 31%, free cash flow up 36%.
Very healthy. Shows the business is generating strong cash, and they're using it nearly done with that 5 billion share buyback.
And possibly more to come. Buybacks or maybe M&A?
They hinted at it, yeah. Said they'll look at future capital returns, potentially more buybacks, or maybe some strategic acquisitions if the conditions are right. Keeps their options open.
Okay. What about tariffs? Any impact on their cloud costs or pricing?
They seem pretty relaxed about that, actually. Their strategy uses the big hyperscalers, AWS, Azure, Google Cloud, plus their own setup, that 4+1 approach.
So that gives them some buying power and flexibility.
Exactly. Multi-year deals, volume discounts. And they don't buy that much hardware directly for the cloud, mostly consuming it via the hyperscalers. So current tariffs on components. They don't expect a big hit to margins or needing to pass costs to customers.
Makes sense. What about this sovereign cloud idea? Is that gaining traction?
There's definitely more interest, with geopolitics being what they are, companies and governments thinking more about where their data resides.
But it's not driving huge infrastructure shifts yet.
Not for most existing customers, it seems. But SAP is investing there. They have partnerships, and their separate U.S. entity, NS2, caters specifically to public sector needs with different levels of data sovereignty. So they're preparing for it.
Right. And one last thing on the Business Data Cloud. Is this meant to replace older SAP tools, like their BW data warehouse?
Not replace, more like enhance and, eventually supersede her for many, I suspect. They see customers on those legacy BW systems as a huge upsell opportunity.
Similar to how RISE targets existing ERP customers for a cloud move.
Exactly that analogy. Move them from the old data warehouse to this new, more capable business data cloud.
And where's the margin in that? Is it just infrastructure cost plus a bit?
They argue the real value, and thus the margin potential, is in that semantic layer, the intelligence, the context, and the data products built on it, not just the underlying storage and compute.
So it's about the value add on top of the data.
Precisely. How much uplift it'll bring, percentage-wise. Still early days. But they clearly expect significant upsell and cross-sell over time as they build out more data products.
Okay. So wrapping this up, SAP's Q1 definitely looks like a strong start to 2025. Cloud's humming, profits are up significantly, and they're pushing innovation with things like Business Data Cloud and AI.
Absolutely. The results really show their transformation strategy is paying off, and the business model looks resilient. That growing backlog provides good visibility too.
Yeah, that backlog number is key. And the focus on AI and data certainly positions them for what everyone's talking about right now.
For sure. There are still those macro clouds on the horizon, potential trade issues, but the foundation looks really solid, and their focus on costs and cash flow should reassure investors.
Right. Which brings us to our favorite segment.
Uh-oh.
This is not financial advice, but let's float an outrageous but plausible trade idea.
Go on then.
Okay, so we talked about SAP's big wins in automotive, right? Helping them transform. That industry is under massive pressure.
Huge pressure.
So maybe consider this. Go long on a specific basket of smaller, nimbler software companies. The ones making niche tech for cars, things that plug into platforms like SAP nicely, think specialized EV battery management software, or connected car data platforms that integrate well.
Okay, the enablers.
Exactly. And simultaneously consider shorting a basket of traditional auto suppliers, the ones who seem slow on the uptake, still heavily reliant on, say, old-school combustion engine parts, not really embracing cloud or advanced software.
So betting on the tech shift accelerating, with SAP as a catalyst.
Kind of, playing the divergence. SAP helps the big guys transform, which boosts the prospects of the agile tech suppliers integrated with them, while potentially speeding up the decline of the laggards. Outrageous? Maybe. Plausible. You tell me.
It's definitely playing a theme, a complex one, but plausible in its own way. Again, not financial advice, folks.
Absolutely not. Just food for thought. So SAP's Q1, lots to digest. Strong cloud, better profits, big bets on data and AI.
Yeah, definitely a quarter that signals confidence. As always, though, we encourage you, the listener, to dig into the reports yourself. Do your own homework.
Thanks for tuning in to Talk Tickers for this deep dive on SAP. We hope breaking it down like this gives you that shortcut to understanding what's really moving the needle.
Join us next time for another earnings breakdown.